Joining us to talk markets as we approach the opening bell on Wall Street, Kathryn Rooney Vera, Chief Market Strategist at StoneX. And the notes I read, they spoke to me today, Kathryn, and that is that we got a little, maybe everybody got a little ahead of themselves. And the perfect scenario that we were envisioning at the end of last year, we sort of thought that was going to happen this year until last week. And now anything that sort of takes away from that makes risk assets, it makes it a little bit questionable. We're not in the same place we were a month ago.
Kernan listens. Yes, that was my thesis coming into 2024, and I think it's panned out pretty nicely. That the trajectory, the disinflationary trajectory, combined with strong economic growth, the market was assuming almost as a certainty, Joe, that would be the trend for the entirety of 2024. And my take was, look, complacency, euphoria is really high. Let's hedge our bets with defensive positioning, with put options. You can protect your tech position, your S&P position for 12 months at the money for less than 4.5%. Made sense to me.
Yeah, in your couple of things you said, what if disinflation is transitory? That's a thought.
What
right?
if?
Right.
Yeah,
I think,
yeah.
Yeah, and we quickly said, oh, the Fed orchestrated the perfect soft landing. The economy can stay strong and inflation can come down to 2%. That's never happened in the history of the world. And we're all saying, yeah, wow, these guys are geniuses and everything's great. I mean, what were the likelihood of that scenario? I mean, we need to look back.
Soft landing is historically improbable, that's for sure. But, things can change. So I think the zeitgeist, the market idea was of this ideal landing that is a historical improbability, considering the pandemic to have launched us, Joe, into some new economic reality, when in fact, from my perspective, it's an aberration. So we're living with the repercussions of that aberration from reality. And what we saw in the last inflation data was that goods prices are coming back up again. So we got a broadening out of inflation. So look, I think that the risks coming into this year were underpriced. I still think they're underpriced. There's a good chance of a soft landing occurring. What we're seeing right now is not that. What we're seeing right now is a reflationary scenario where the economy is growing way above potential. Reflationary scenario means inflation creeps back up again because economic growth remains strong, risking the multiple, while the other risk is on the other side, Joe, and that's hard landing, that's recession, and that risks earnings. So there's underappreciated risks right now in the market.
And we could have both because the reflation could cause the Fed to orchestrate a harder landing. You also point out the possibility, I mean, China cut rates significantly. What if China rebounds? No one thinks it's going to. Suddenly we believe, we accepted China doing like 11% every year forever. Now we think they're never coming back. That country could come back, and that would be inflationary.
Well, that's a risk that people should have top of mind because no one's talking about it, right? And then the other risk is we have an election coming up. If we do get Trump too, that could also be inflationary, So I think that there are things that, the mainstream, we analysts are not talking about that I think are underappreciated risks, and we mentioned several of them.
Right. It might be inflationary, but we also might have a southern border again. I mean, I'm kidding. I'm not going to enter into any political commentary.
No. I'm an economist, but just looking at the numbers, I think we have to be cautious on the inflation trajectory and this anchor bias, Joe, that the market has fully discounted.